So you're under contract. What's next? When you're working with me as your agent, let's talk about the first part of the contract that's important. You have the option period, which I usually ask for between 7 and 10 days. That's the time during which you're going to get the home inspected. And either you and the seller agree to repairs or concessions for repairs. Maybe there's nothing that concerns you and you move on. All those time periods end at 5 p.m. the last day. And when we execute the contract, that's the date that everybody signs. That option period begins the following day. The execution date sets the time frame for everything on the contract. The next thing, if there's an HOA, we usually ask for at least a minimum of 10 days to get the documents. And you can possibly back out if there's something you don't like about the HOA. And we always put 10 days in there for the seller to get that to us, because anything less than that is a rush. And that's something that you'll have to look at, see if you like the covenants and restrictions, the bylaws. It's something as your agent I can't really talk about. You can possibly talk to the title company, because I can't give you any legal advice on that portion. But I'm happy to read it and see if I can help you understand it. Just can't give you any legal advice. Another part of the contract on the survey. The seller may have one, they may not. Many times the seller is going to ask you to pay for it as a buyer because it's for your benefit. I always try and ask for the seller to pay for it, not a guarantee. And on that, I always put in at least 5 days. Well, I ask for 5 days, sometimes get 3 for you to review objections. It could be, say you're buying in a neighborhood, may or may not be an HOA, and say you've got a little land and you want to be able to put a storage building out there, build a pool, like for instance my house. If somebody put that as an objection, I would tell them right up front, not going to happen, because you can't build a pool in my yard, because I had to sign the document that said I couldn't. You also have the finance period, and typically that's 21 days on the contracts I negotiate, sometimes a little less. That's the time during which your loan is getting approved. So let's talk about this in detail. During that loan approval process, it's very important when the processor or lender asks you for documents that you comply right away. When you got pre-approved with my lender or one of my lenders, they're typically going to ask for 2 years of tax returns, a couple months of bank statements, maybe 401k, other investments, whatever funds you're using to show your reserves, or for down payment and closing cost. And they want all pages. Don't send them screenshots. They need even that empty page, because they're looking for insufficient funds if it's checking account or things like that. And they may, during the process, there may be some credit explanations you have to give. Whatever you do, don't fuss and fight with the processor or loan officer. They need that. They're not being hard-nosed. The underwriter's requiring that. And who's the underwriter? They're reviewing all your documents to make sure that you qualify for that property. They're not being mean, nasty, or jerks. It's their job. It's what they do. They're licensed. They have to make sure that that loan can be resold to the secondary market if it's a mortgage broker or banker. If it's a credit union, a lot of times they will retain their own loans, but they still have the same criteria. Do not fuss and fight with the lender or loan officer. Whatever documents they're asking for, get it to them. Don't wait 2 days, 3 days, a week. There's what's called a 5-day letter and 10-day letter, and you can be in default on that contract. And what are the results of that? You could lose not only your option fee, your earnest money. If you still qualify, you could be sued for treble damages. That could be up to 3 times the price of the home, plus legal fees for all parties. So that's why I wanted to spend so much time on this, because it is very important. Also, the other thing when it comes to that finance period, in the hold period while you're under contract until after the day after you've closed and fund, do not apply for credit. Don't go move money around from account to account. Don't go buy something like a card. Do not apply for any loan. Do not change jobs, especially if you are in a salary job and you change to a commission job. It's all over. I've had clients that change jobs in the middle, cause some issues. It could cause your loan not to close on time. You don't want to do that to yourself or possibly the seller. That right there could cause you to be sued. Typically not, but you could upset a lot of people's timelines. So that's why you want to make sure that anything you do, call your loan officer. I used to be a loan officer, so I can give you some advice to a point, but I'm going to ask you to talk to the loan officer about anything specific. But these are the things you need to know not to do. And if you're thinking of making a job change, try and do not do that during the loan process. And if you take a new job, I would say just stay quiet on it at your current employer. Try not give notice until after you've funded on your loan. That would be the best thing if possible, if you're going to change jobs. But it's better just not to change jobs at all. Now, let's talk about the appraisal. During the finance period, there's also appraisal. And the lender's going to ask you to pay for that up front. That's money that's out of your pocket. It's not refunded at closing or anything. But so the lender can make sure that the collateral or the home meets all the lender's requirements. Or they don't do an inspection, but the appraiser will go out. They'll look for some structural things. They'll look at the roof. And typically, I'll have you talk to one of I only have one person that I refer everyone to for insurance. And they may pull what's called a clue report to see if there's any unusual claims, and we'll go through the seller's disclosure and look at that before we ever go under contract on anything, if possible. The seller's disclosure tells us if they made any claims and didn't use the money to make the repairs, because that's a no-no. So if the home appraises, we keep moving forward. If not, we can go back and negotiate with the seller and say, hey, you need to reduce the price. It's a two-way street. They have the right to say no, and you have the right to walk away during that time. But this is one reason you need to work with the lender, because you have a limited time frame to get things done. And it takes time. And if there's a holiday during the time, I usually add a couple days in the finance period or more. So buying around holidays makes it a little more tricky. I'll have a longer closing time and a longer finance approval time. So now, let's say we've gotten through appraisal and all that. The next step, we're waiting for the closing date. 3 days before, if you're getting a loan, 72 hours prior to closing, the lender will send out the loan documents for you to review, and make sure that you respond to that, because it's time stamped. You need to click it, open it up right away when you get it, and don't wait till midnight that night, because then you could really upset the apple cart. So say now you've done that, they're going to tell you what you need to bring to closing. They're going to show you a list of all your credits. And of course, I'll review that with you. I'm happy to. You'll have to send it to me, because typically the lender does not send me any documents. They don't send me the closing disclosure. So you'll forward that to me and we can go over it together. If there's anything lender specific, I'll ask you to refer to the lender, but I can look at it, go through line by line, and explain things to you. So now you're prepared for closing. Typically, most title companies now are requiring you to wire the funds instead of sending a cashier's check. And when it comes to wiring instructions, when the title company sends you a wire instruction email, you're to call the title company and ask, did you send this email? Make sure it's them, because once you wire those funds, they're gone. There is wire fraud, and I have you sign a document about wire fraud. But you need to call the title company before you wire any funds. Sometimes they allow cashier's check, but that can hold things up, because banks actually hold cashier's checks, sometimes for multiple days. So typically you're going to have to wire. Be prepared for that. If you have one of these banks, I don't want to mention any names, but if it's not a brick and mortar bank, you may have some issues when it comes to wiring. So ask that far in advance. I'd say a couple weeks in advance, to make sure there's not going to be any issues. Now you go to your closing that morning, hopefully, because just so you know, the last hour of the day that funds can be wired to fund your loan is 3 p.m. Central, 4 Eastern. So you want to close long before then, and you want to make sure that if the lender needs you to come back and initial anything, you do it right away. I would suggest taking that day off when you're closing. Once the title company say that everything's good, title company sends out an email to myself, you, and the sellers, and says the loan is funded. Now you're able to get the keys. And if you're here locally, not out of state, then usually I will go pick up the keys and deliver them to you. Or there may be other arrangements made from time to time. Sometimes the sellers leave them there, they hand them to me, and then we meet somewhere for lunch. And once they tell me that the loan's funded, I hand you the keys and off we go. If you have any questions, hopefully this answered most that you would have, but if you have any questions, don't hesitate to reach out to me. You have my number, my email, and of course at the end of the video that's included too. Have a great one.